Commodities is a recent business here in Investec. We've offered commodity investment products for the first time in the last sort of 6 to 8 months. Commodities is often, it's pretty new to the South African investor, both retail and institutional. And the reason for that is, it's never been invested in as an asset class on its own. It's always been considered that South Africa is a resource-centric economy and that they're naturally getting their commodity beta within their stock returns. So I guess this product that we bring into the market is one of the first of its kind in the sense that it offers you commodity beta while also protecting you from exchange rate risk. Just to get back to the commodities point, there's various rationale for investing in commodities as an asset class. Obviously, the first one is the diversification benefit. As I was saying earlier, commodities in South Africa, investing in resource stocks does not necessarily give you access to the pure underlying commodity return. There are various factors within the resource stock which will distort the commodity or the stock return away from the commodity return. These factors are numerous, such as the company's dividend policies, labor-related issues, the management of the company. So all of these things actually distort the resource stock return away from the underlying commodity. And correlation levels, when you actually measure them on an absolute basis, are far lower than a lot of people anticipate. I mean, to give you some examples, since 2002, if you measure the correlation of the South African Top 40 Index against the Goldman Sachs Commodity Index, which you could consider the S&P 500 of commodities, you see that correlation comes out at around 20%. So very, very low to negligible correlation levels. If you compare it to some of the other traditional South African asset classes, for instance, if you look at the All-B Index, or South African All-Bond Index, that correlation is around 9%. So there's significant correlation benefit by investing in commodities. And what it effectively does, if it's put in within a well-diversified South African portfolio, you can actually get a far better risk-weighted return profile for that underlying portfolio. And I guess that's the key rationale and key driver for this latest move by institutional investors in South Africa into commodities. There are other benefits, of course, as well. Commodities are naturally denominated in US dollars, so there's a natural hedge against US dollar deflation, and that's particularly relevant now that you have quantitative easing, particularly open-ended quantitative easing in the US, which is bound to reduce the buying power of the US dollar. So that can only be positive for commodity-based currencies in that scenario. Obviously, the second rationale would be as a natural hedge against inflation. Commodities is a core part in any CPI calculation around the world. So there is this natural inflation offsetting component, which a lot of investors are very, very keen on.